Hello, welcome to another update on AVAX. Yeah, the AVAX chart is in a problematic situation here locally, at least. We still, if I zoom out a little bit, we still have something that could be interpreted as a 5-wave move up into the May high, 12th of May high, similar to what many cryptos did. Then a corrective pullback, and then maybe something that could be a 5-wave move up, but then a sharp pullback. And I think I mentioned in the last update already, I mean, this is basically invalidated. It's not yet formally invalidated, but that double bottom really makes a 1-2 setup extremely unlikely. I would not have any trust. It's holding. I mean, if it is, then the Friday low is the formal invalidation point locally here. Below that level, the wave 2, the larger wave 2, will come into play again, and the invalidation point of the larger degree pattern is the April low, which formed at $14.70. This is really the formal invalidation point of this 1-2 setup. I wouldn't worry so much about the smaller degree pattern here that will likely break, and we might test this larger support area once more between 1249 and 1674. But as I said, to keep the 1-2 or the AB setup that we have talked about over the last few weeks alive, the market needs to hold above the red line at $14.70. That's really crucial. Now, first indication a low is in would be a break above this last swing high that formed at around $22.80. This is a level that must be broken, ideally in 5 waves. If we can get a 5-wave move above that level, then the indication would be there that we've started the next leg. But just a break would help with volume. And then, depending on whether we hold the Friday low or not, we might be here in the heart of a third wave, just internally based on this nanostructure. And that could be part of this 5-wave pattern to the upside. But as I said, a double bottom extremely rare in a 1-2 setup, so I would not expect it to hold. Rather, one more low could lead to another test of this box or the red line there. Essentially, what we just need to see is a break out of this range, and the first indication is a move above that 2280 level. If we then start to see the market move a little higher, the overall first key resistance and key target after breaking above 2280 will be the swing high from the 12th of May, of course. I mean, this is the top of the wave 1 or the A wave, and it could take us to 33.66 then. Again, just corrective rallies here expected. I do not expect necessarily a move to all-time highs. I think we take it level by level with this chart as well. It's not a high quality chart. It's a messy chart. But the nanostructures do allow for a rally to round about 33.66, the 100% extension of the initial move up after the April low. Yeah. And again, that can take us there to round about 33.60, 33.70 in 5 waves. And then, we'll see if the market can get to that resistance area over there. Then a rejection could indicate that we've started the third wave to the downside here in the blue scenario. And at the moment, blue is preferred, but that means short-term higher, certainly likely, before we then start the decline in the third wave. So that's how we're tracking it. There is a potential for a wider rally, but I wouldn't necessarily rely on it. I don't have anything immediately bullish left if the price breaks below the April low, however. Surely it could still find support at 1249, but the immediate 1-2 setup is broken, or AB setup, so the market would need to build a new setup. That's just a quick update on AVAX involving all the levels. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.